All right, so welcome to a Knowledge Center episode from the chart readers. Given the market conditions, I thought it would be really important to talk about a couple market crash strategies. Really, I'm going to talk about two specifically, one far more than the other. So, again, I'm not here to start yelling doomsday or anything like that, but if things get bad, it's really important to have a plan, and I'm at least going to give you two quick things to consider. Before I go on, if you haven't already, check out the website, chartreaders.com. If you scroll to the very bottom, I have a weekly email you can sign up for. It's completely free. All I ask is for an email, and you'll get just a few more details than I tend to throw here, right? Sometimes I think of other stuff. But right now, again, like I said, I'm going to talk about two strategies for a market crash. Look, the first one sounds really basic and simple, but it needs to be said, okay? The first strategy actually is do nothing, okay? And do nothing can mean one of two things. Either you can literally just leave your stuff as is, knowing that you're a long-term trader, you have no intention of touching your money over the next year to 5 years to 3 years, just over a long period of time. Like, you have no plans of moving that money for the next, long time. Just literally do nothing, okay? Because over a long period of time, the stock market is good. The stock market brings you value. The stock market will go up, okay? There will be dips, there will be crashes, there will be recessions, whatever word you want to use, but in the long scheme of things, it will recover. And if you sincerely know you have no intention of moving or touching that money, just leave it and do nothing. If you are, look, I'm a little bit of a gambler. I think a little bit of us that move money more regularly than a long-term trader, we have a little bit of a gambler in us, right? And if you know you move money a little more frequently, let's say you move it every day, every week, hell, even every month, right? I think you might consider pulling some money out and just holding some cash, okay? It's just, if it looks like things are bad, averaging down can be deadly. And I'm going to make another video on averaging up versus averaging down at some point. But believe me, in my previous trading life, I don't know what to call it, right? But before I kind of changed to this new trader that I am, I lost a good amount of money averaging down because, again, I kept buying thinking that this was a great price. I kept buying thinking that this was a great price. And eventually I just kind of ran out of money to keep buying, and it sucks because I could have literally held all that money, bought, not even at the bottom, a little bit after the bottom, right? As it started to turn, I would have had way more shares for that same amount of money, So, again, I have that gambler in me. I imagine you do as well if you move it a little more often. And again, you can just do nothing, pull that money out and just sit and wait, If you have an itch to just move your money like you normally do, but you want to move it, let's call it somewhere safer in a crash, I'm going to talk about inverses here, okay? So we will look at the chart at some point. I'm just going to talk a little bit and then I'll kind of do a visual. But inverses are a way for normal everyday people to short stuff, okay? Now, I know the word short means a bunch of different things to a bunch of different people, but look, in order to actually short something, you need a special account. And that special account has, dollar requirements that become really high for some people, right? And it sucks to not be able to make money on the way down if you don't have enough money to make that special account. That sucks and it's not fair, right? So this video will show you kind of what you can do otherwise, and that goes back to, again, the inverses, okay? So what are the inverses? The word itself, inverse, basically means, upside down, backwards, opposite. I don't know what Webster calls it, right? But inverse, like the regular word outside of trading, means the same thing in this trading world, right? And there are so many inverse tickers. You can do a Bitcoin ticker if you think that the crypto stock or the crypto coin is going to go down. You can do oil inverses if you think oil prices are going to plummet per barrel, right? There are inverses for the NASDAQ. There are inverses for the S&P 500. There are inverses for the Dow Jones. And again, if the markets are crashing, that means the inverses would be doing the opposite. They would be doing the flip of it. It would be going up, right? So that's what makes the inverses deadly. And again, the inverses are exactly the same as any other stock ticker. The inverse for the S&P 500 is the exact same thing as Tesla, right? You buy it and you sell it the exact same way. You buy Tesla if you think Tesla's going up. You buy inverses if you think that specific thing is going to go down. Okay? So with that, I'm going to move into the charts and show the first one. Okay, so this is SPXU. Okay, again, if this was TSLA, we'd be looking at Tesla, right? Instead, it's these four letters. And again, you're going to see a lot of these similar words, okay? Pro shares, ultra pro, short. You might see just pro. You might see ultra short. Like there's a bunch of different versions of inverses. And again, I sincerely advise you to do a quick Google search, and you'll be surprised at how many there are, right? But what we're looking at is an ultra pro short of the S&P 500. Okay, so again, this is a regular stock that acts as a short for the S&P 500. Okay, and look, it's going up a lot, right? So the same rules apply when I look at my videos on the other stuff, right? Look, it's gone down under the 8, trading under the 8, trading under the 8, trading under the 8, breaks the 8, makes a run at the 20, comes back, makes a run, keeps going up all this time, trading over the 8, hard fail right here, big bounce and just a big ride up, right? Again, the same way we read our stocks is how we read the inverses. Really quickly, I'm going to show you the S&P 500 on this exact same view. And it's inverted, right? It's pretty much a horrible triangle going down, right? As opposed to SPXU, which is the inverted. It's going up, right? So again, that's the magic of inverses. The really important thing, look, I'm going to take a very far back view. Look at this. Look how bad this stock at one point was 30,000 a share, and it's now dropped to 21. Why? Because again, in the long scheme of things, the stock market is really good. There are moments of crashes, right? So like, let's look at them. I got to zoom back. So this was after, there was no 2008, but look, in 2012, this thing went up, right? In 2020, this thing went up, right? There was a little thing before 2020 as well, just a little bit before COVID in that 2018, 2019 moments, right? And again, right now, it looks like it's making a rather big curve. And again, look, we've never been over the 20, right? We've tested it here, but never got over. Tested it here, but never got over. Got really close there, but never got over. Actually, I'm wrong. We did get over right here, but it kind of wasn't very significant, right? Look at where we're at right now. So again, if the monthly looks like this, that might mean there's going to be a lot of bad weeks. And again, this weekly looks good, right? Look at that. The next line is up here. And look, I'll make a technical analysis video after this, but again, I think the money picture was this. Okay, again, one more time. Went from crash to doing really well, right? If you look, that's going to be the complete opposite of the S&P 500. Went from really well to crashing, right? So again, this is how you short something. You look for inverses, okay? And one more time, I'll make a more technical analysis video, but I didn't want to spend the first 10 minutes explaining it, then getting into it. But again, you can see it, right? I really, really hope you can see it, because Inverses are just that. And if you see something going down and you don't have the funds to have a margin account to short it, you buy inverses and you will still do well, okay? I promise you that. Look, again, this thing literally went from, right, I would have played it right here. If you watch my videos, you know me well, right? It would have went from 14 to 21, which is a 50% gain, right? In actually, let's call it a month, right? Basically late August to basically late September, right? A 50% gain is really hard to find in this kind of market, and you really didn't have to do that much work, right? And hey, you might have even sold it up here, got back again right here, right? I mean, there's just so many different ways this could have been played, but the main thing I want to say is you can actually just do nothing and just kind of watch it ride, because again, the weekly is setting up so nicely. The monthly is setting up so nicely. And again, I'm not trying to get into the technicals or make any sort of assumptions, right? But if it looks bad, inverses can be good. So again, this is not financial advice, but I can't stress how important it is to get to know these. Google them, because there really are so many. And like I said, from inversing the major markets to inversing, commodities like oil. I have to imagine there's one out there for like wheat and gold and, soybeans and all. There are inverses out there that you need to familiarize yourself with. And one more time, let me just kind of show this again. This is not something you hold, right? Because after the pop, it's going to drop. After the pop, it's going to drop. But 1, 2, 3, 4, 5 good months, okay? Where's another one? That was the biggest one. I'll say that at least, okay? Yeah, that's actually the biggest one. But it's seen 5 months. Again, I do these live, right? I don't practice these. But it's seen 5 months in a row before. It could happen again. And look, we haven't necessarily had it, but I would say we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 good months. Just because, look, that's a nice uptrend right there, right? So there were a couple reds in between, but hey, it's been going up, like I said. So, again, get to know these. I always am bullish. If you've watched my videos, no one roots for things to go up more than me, I swear. But sometimes that's out of our control, and you need to find the other things that are going up. So trade safely out there. I have provided my death line number, so I advise you go back and look at them. But yeah, we're getting close. So be careful, and hey, have a strategy. And one more time, taking your money out and waiting is a very, very good strategy. I promise you that. There's not a lot of work there, right? You just take it and wait. So trade safely. I really hope you're learning. And hey, one more time, check out the website, sign up here if you haven't, and hey, subscribe if you haven't already. Appreciate your time.